Hello, welcome to European Open Briefing for Wednesday, September the 12th. I'm Rafi Barajan, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. We are seeing slightly weaker US dollar this morning. This comes amid reports that the US and Canada are close to reaching a deal on NAFTA. We heard some positive remarks by President Trump yesterday, and there's reports that Canada is willing to make concessions on its protected dairy market to the US. We saw the Loonie surging yesterday as those reports came in. At the moment, USD CAD is trading around 1.3050, slightly firmer from yesterday's close. We can see that the dollar index is slightly down and dollar yen is also slightly weaker. Moving on to European currencies, we can see the euro is back below the $1.16 level. This comes despite the fact that we had better than expected German Zero Economic Sentiment Index yesterday. There were some gains initially. On top of that, we had the falling Italian government bond yields, but the euro wasn't able to sustain that momentum. Sterling, though, was boosted on several Brexit-related headlines, which mostly pointed to the EU and the UK coming close to reaching a deal by the November deadline, which hasn't been officially announced yet, but the pound's gains are being capped by a fresh threat to Theresa May's leadership by hardline Brexiteers within her own party. Overall, market sentiment remains fragile. We saw the Chinese yuan falling to 2.5-week low after China yesterday requested from the World Trade Organization permission to impose sanctions on the US. This was due to an earlier ruling against the US for anti-dumping policies, which China was complaining to the WTO. So that adds to the already existing high tensions between the two nations. We can see Asian indices ended mostly down today, but in Europe we do have most major indices moving higher. The Aussie and the Kiwi are stuck close to their recent 2.5-year lows. If we look at commodities, oil prices are up sharply, extending yesterday's more than 2% gains. This came after an EIA report said that the U.S. Energy Department has lowered its forecast for U.S. output for 2018-2019, and given the already tightening market, mainly down to those sanctions on Iran, there are fears that the oil market could tighten further. That's why we're seeing a bit of a rally there in oil prices, and we can see it's the biggest gainer this morning, followed by dollar Swiss franc. Though overall, broadly, the dollar is one of the worst performers, followed by euro yen. So let's take a closer look at the dollar yen. We can see it's actually hasn't eased that significantly. It's currently slightly below yesterday's peaks, around 111.65. It's currently trading around 111.50. So it's being reported that Canada could make significant concessions to the US and we could get an NAFTA deal very soon. Though China's actions with regards to the WTO, that's basically highlighting to the market that those trade tensions remain and are likely to go away anytime soon. So there's strong support still for both the dollar and for the Japanese yen, the more traditional safe haven currency. So that's why we're seeing little reaction in the dollar yen pair. We had more strong data out of the US yesterday. We saw the US job openings showing yet more tightening in the US labor market, and that's more or less confirms the rate hike by the Fed later this month. We've got more important data coming up. We've got inflation numbers on Thursday and retail sales on Friday, which should be watch out for. A quick look at the Canadian dollar now. We can see those sharp gains yesterday as those reports came in with regards to Canada willing to make concessions on its dairy market to the US in order to secure a deal on NAFTA. So the deadline for the NAFTA talks to end is October the 1st. So that is there's more optimism now following those reports, and especially after President Trump also said that the trade talks with Canada are going well. We can see the Loonie reaching a one-week high 1.3038 to the US dollar. And having a look at the UK pound, we can see there's been quite a bit of volatility for sterling since late August, mainly as those headlines, as we get more and more headlines with regards to the Brexit negotiations. There were some mixed signals yesterday from the EU. Some reports said that the EU is softening their stance. Others reports suggest that actually their stance hasn't changed. But overall, most indications are that the two sides will probably manage to come to an agreement on the withdrawal agreement by a special summit being planned for November. And this morning we had more positive remarks by the European Commission President Jean-Claude Juncker, who said that he agrees with May's Chequers plan that the UK and the EU should have a very close relationship after Brexit, and that the EU is working day and night to secure an orderly exit for the UK. We can see sterling getting a bit of a lift, climbing to around 1.3030 against the US dollar. That's still slightly below yesterday's peak of 1.3086. There are some reports suggesting that some conservative MPs are plotting to get rid of Prime Minister Theresa May, as they don't like her Chequers plan and they want a hard Brexit. So that is somewhat limiting the potential gains for sterling. And a quick look at what's coming up. US producer prices will be the main focus in terms of data, plus a speech by Fed Governor Lael Brainerd. That's it from me. Thank you very much for watching, and have a great day.